Hello again, everyone. This is Mike Paulenoff, mptrader.com, with your weekly video chart update, May 16th, 2010. There is so much uncertainty about how markets will trade tonight. That is to say, will the euro tank tonight on the opening and drop below 123 and go towards 116, if not lower? If the euro is weak, will the central banks come in and support it, try to drive it to the upside and drive some of the speculators out of their short positions? How will gold and the stock indexes respond to this kind of thing? There are so many unanswered questions that instead of me speculating today about what the various scenarios are tonight, I'd rather do something else, which to me is a fascinating exercise, and I hope you get a lot out of it as well. What I'm going to do is I'm going to go across the commodity spectrum in various ways, which to me is showing some extremely interesting trends and tendencies. And after it's all done, you'll see where I'm going, and for the most part, you'll see why I'm so worried about future global economic growth, and if that contracts the way it appears to suggest, these various indices suggest it could contract, then we'll end up going into a double dip around the world, and that will not be good. It will not be good. Anyway, what you see on the screen right now is the GDX, the gold miners ETF, which a lot of you have tracked based on my coverage on the site of Newmont and some of the other, and gold in general, the GLD. So this is a very constructive picture. This is a daily chart, goes back to October of 08, and you can see that the GDX, the gold miners, have had a series of higher lows and higher highs, and last week tried to get back up to their prior high, which occurred last December, December 2nd to be exact, at 55.40. So we're approaching that. All the relevant moving averages, the stair-step ascension of the chart, very constructive. So let me put, that's a daily chart, so let me put a weekly, and you can see that the weekly is bumping up against some really serious resistance, but there's an awful lot of accumulation here that could blow this GDX through the top side of the chart, 56.80 or 90, and it could really take off, probably go to 62 or 63 from here. All right, so let's go back to the daily. Again, this is the GDX. And so keep an eye on that chart. Keep this chart in mind. Okay? All right. Now let's take a couple of components of the GDX to see what they look like. So let's go over to Newmont, which I happen to have been in, and I'm still in for the portfolio for MP Trader. And actually, Newmont looks better than the GDX. Why? Because Newmont made a new high last week, above the December high, whereas the GDX itself has not. It's bumping up against this high. And after it made a new high, the GDX, and that high was what? 59 and change? 59 and a half, actually. It consolidated above 56, the breakout point, 56 and a half. So the Newmont mining is acting extremely well. In fact, it's acting better than the underlying index itself. So this is a leader, and this is a very powerful chart. Now, you know what I think of Newmont, because if you go to a weekly, you can see that Newmont broke out of not only above its recent high, but it broke out of a high that was way back in January of 08 at 57.55, and this is an enormous breakout. It's probably going to retest the 62.5, if not higher. I can make the case it's going into the low 70s. Okay, so Newmont, as it relates to the GDX, is actually outperforming the GDX, which is a very good sign in general for the miners. Now, let's take another one, ABX. Right now, ABX looks pretty good, but it looks pretty much like the GDX. It's pushing its December high, and it, to me, it has a lot of. It looks like after consolidation here, it should retest and take out its December high. Let's see what its weekly looks like. And its weekly is pretty interesting because it's bumping up against some pretty serious resistance, and if it takes out last week's high at 47 and a quarter or so, it should take out the November high November-December high at 48, and then it's off to the races for Barrick ABX. So those are the two components of the GDX I wanted you to see, and they're relatively constructive. And in the case of Newmont, very constructive. All right, so let's go back to the daily chart. All right, so that's the gold side of things. All right, let's go over to the silver side of things. We'll do the SLV. All right, now the SLV is not a silver mining index, which is the SIL, but there's not a whole lot of data on the SIL yet. Let's take a look. See, so I'd rather not use that. So let's use the SLV, and the SLV broke to a new high above its December high last week, consolidating at around 19. It still looks pretty good, pretty good. Now, if we go over to a weekly, you can see how much upside it can generate off of this pattern, this huge accumulation pattern. It's probably going to take off and move above $20. Consistently move above $20. If that happens, underlying silver moves above $20, and you've seen that monthly chart I put on the site, that silver could just rocket if it breaks and sustains above $20. So silver looks good, but the point of this exercise is to show some of the silver